Hey everyone, this is Christian Medina, your local real estate expert here in Southern California. Today I'm sitting down with Idrees Khan with
Pacific Lending.
And in today's video, we're going to talk about what is needed to get qualified for a home.
So some items that we ask for when getting pre-qualified is if you're a W-2 wage earner, we're going to ask you for 2 years of your most recent W-2s, 1 month's worth of your most recent pay stubs, and 2 months of bank statements. If you are self-employed, we're going to ask you for 2 years tax returns. And also, if you're a 1099 employee, we're going to ask you for 2 years worth of tax returns.
So Idrees, do you need a 700 FICO score in order to qualify for a home loan?
No, you don't. Easy answer. The people can qualify as low as 500. Typical FHA is at 580. Conventional loans are starting at 620.
Okay, so you mentioned 500?
Yes. So with the 500 FICO score, you can go FHA, but with an FHA 500 FICO, you're gonna have to put down 10% versus your typical 3.5.
Now, are there other programs right now where you can use down payment assistance, government grants?
There are, and with those types of programs, they require their own guidelines on their FICO score. So typically, it's around 640.
Well, let me ask you this: is there a difference in, say, the type of program for someone that's going to be at a 580 FICO score versus one that's a 700 FICO score?
Program, no, because it's all going to be under FHA if we're going to go FHA or conventional. But for the amount that they qualify, just based on the interest rate that they're going to qualify for, does change.
Okay, so it's going to be on the amount they qualify for a home.
Absolutely.
Okay. Now, when your credit is run, you have 3 credit bureaus, right?
Absolutely.
Now, out of these 3, which one is used? Because I noticed there's a low one, there's a middle one, and there's a high score.
So what we look for is we take the middle score out of the 3 scores. So if you have a 700, a 690, and a 680, we're going to use 690.
Now, the second item that's needed to get your pre-qualification going is employment, right?
Yes.
So in our employment, how many years do they have to be employed to be able to, get pre-qualified?
For at least the past 2 years. So we're going to ask for the most recent 2 years W-2 if they're a W-2 wage earner, or if they're self-employed or 1099, we're going to ask for the last 2 years of tax returns.
Okay, great. Okay, so a quick question here. So if I worked at the restaurant business 1 year and then the second year I was working for an IT department, would that count as the 2 years that you guys need to get qualified for a home?
Typically, no. You're going to want to be in the same type of job field. So if you're going from one company to another, that still is fine, but it has to be in similar job fields to where it makes sense for the past 2 years.
So if you were a secretary for a school and then you're a secretary now for
any other business, absolutely it'll work. So if you're going to be a secretary at a major company and then you're going to be a secretary at a school, it works out just the same because it's the same job field.
Okay, great. So here's a question about the bank statements. Now, I have had clients that have had that don't like using bank accounts sometimes, or putting all their money in the bank account, and they save it, in their safe somewhere.
Absolutely.
Under the bed, under the pillow. Should they just grab all that money, walk into the bank, and deposit it?
If it's not in escrow already, then absolutely. Beforehand, you always want to plan ahead. So you're going to tell your client, if you do have money underneath the mattress, put it in the bank account so we can actually document it and show it.
So they should do this before getting into escrow, before
getting into escrow. Once we're in the pre-qualifying stage, we can do that and instruct them to do that and say, hey, you know what? If you have any cash, put it in. That way, when they end up finding the house a month or 2 down the line, it's a non-issue.
Okay. So the last thing that you guys need right now in order to be able to qualify a person, you need to be able to look at their debt to ratio, right?
So yes, debt to income ratio is something that we look at. It actually helps us determine how much a borrower qualifies for. So it's basically taking their monthly income and minusing out all their monthly debt obligations, like minimum credit card payments, minimum car payments, student loan payments, anything like that.
So you're basically just weighing between their income and their debt, and you're coming up with a...
Absolutely. So each loan program has its own ratio, right? So as long as the debt to income ratio is within those guidelines, that's what we get them qualified on.
Perfect. All right, guys, well, there you go. Hopefully this video was able to help you out in at least knowing what you need to get prepared for a pre-qualification. And of course, if you guys have any questions, make sure to reach out to Idrees. Now, Idrees, where can they reach you?
They can reach me through my email or my cell phone. My email is ikhan@paclending.com. and my phone number is 909-605-3844.
And once again, for me, it's 909-576-1122 at agent.cmedina@gmail.com. That, of course, is where you can reach me if you wanted to connect with me, or if you wanted me to put you in touch with Idrees as well. So that's it for today's video. Hopefully this video was helpful to you guys. I'll see you guys on the next video. Have a great day.
Take care.